Hey guys, Jordan here from Coin Bureau Trading. Just a quick update on the crypto markets. On the 1 hour time frame on Bitcoin, we can see here that Bitcoin is in the depths of the value area low in this current range and sitting just above our last key support in this range. We are seeing some wicks come in, and we did see overnight Bitcoin drop twice to the depths of $98,900. This is a new daily low for Bitcoin in this range. And this could mean two things. This could be a nice long opportunity all the way back up to the value area high, but we are also very close to losing this key support, which could mean, as I showed in the previous video, a move back into the previous range and a possible move all the way down into the 80,000s for Bitcoin. If we zoom out and go back in time on this 1 hour time frame, then we can see how this last key support is so important, as it really is the last high volume node within this current range. If we lose this, it's a slippery slope back down into the previous range. Moving on to the daily time frame, we can see here that the next high volume node within this value area low is this zone here, around about $104,000 to $105,000. If the bulls can step in here, we may very well see a move from this zone right up to test this previous support now as resistance. We don't see much volume traded in this range on the fixed range volume profile, so this could be quite a swift move upwards. We do see quite a big buy wick here as support at this level, and then a drop below it, which means we could see some heavy resistance as a support and resistance flip. If the bulls manage to break this level, we could see a nice move out of the value area low up to the point of control. We can see by these two big buy wicks that a decent amount of traders did get into leveraged longs at this level. And this 98k level really is our last hope for keeping this range. The deciding factors are now whether we break this resistance, leave value area low, and what happens if we come up to POC. Does it send us back down to value area low to again test these levels of support, or will we break POC to come up to value area high to just rinse and repeat the entire range again? We are seeing at the time of recording what looks like a very nice bullish harami pattern with still some decent hours left in the candle. As we can see from previous daily moves, these bullish harami candles are very nice reversal candle patterns that do often result in very strong moves to the upside. Just a recap for those who missed the previous video, if we do lose our key support that we're currently sitting just above and move back into the previous range, we could see quite a swift move down to our level of largest traded volume at the POC of the previous range, around $96,000. We can then see a few high volume nodes on the fixed range volume profile, which act as our key levels of support in this previous range. We can then see that if we lose these levels, 92,000, 87,400, 84,300, that we could see a swift move down in the value area low all the way through our key levels of support in this value area low of 76 and $67,800. These would be the two sniper zones to look for long trades if this does occur. These zones are for the high leverage precision snipers, and of course they do need confluence with multiple other indicators. I know this all seems very bearish and doom and gloom, but just remember, this is only on the cards if the bears manage to push us down below this key level of support and below our actual value area low of this current range. Next up is for us to see how price reacts if we manage to come up and test this resistance above us. If we match our RSI to our stochastic RSI, we can see that our regular RSI has almost reached into the oversold territory, and our stochastic RSI is deep within that oversold zone. For those of you who have watched my previous sniper entry video on rhyming the regular RSI with the stochastic RSI, will already know that if regular RSI comes into this zone and we see stochastic RSI turn around to break its own slow moving average, this could be a very nice sign for a long trade here on Bitcoin. We can also see here on the daily time frame, it has been a long time since Bitcoin has actually reached into the oversold territory on this regular RSI on the daily time frame. The last time this happened was all the way back here in February. This means two things. If our RSI is going to come into the oversold territory, it could mean another test of the ultimate value area lows round about 98k, or that Bitcoin might simply from here just come up and make a low just above the oversold zone. Keep an eye on your stochastic indicator here on the daily to see where the stochastic line actually crosses over its own slow moving average, as this is a nice indication that there is a reversal happening. Just beware of the fake outs here and wait for the stochastic to actually enter back into its momentum zone to the upside before confirming your move. If we bring up my favorite indicator here, the market cipher B, we can see here something very, very interesting happening. Our wave trend has dipped below the 45 line, and there is currently no sign of it moving towards its slow moving average to create a buy dot. We do see VWAP turning around to head towards the zero line for a potential cross, which you will learn in the upcoming videos is the reversal sign. We can also see that money flow is currently pointing in an upwards direction, although it seems like we are getting a curve around to the downside. For the market cipher traders, make sure to watch out for where this wave trend crosses its own slow moving average to create a green buy dot trigger wave signal. Also, of course, make sure if you're going to take this trigger wave signal that the VWAP is crossing to the upside and the money flow is pointing up at that time. Also, be sure to add 2 more levels of confluence to those 3 levels, like your RSI, your Fibonacci's, your fixed range volume profile, etc., to make sure that you have 5 levels of confluence on that trade. If you are trading along with us, please do take advantage of this awesome campaign that we have just for this community from TOOBIT, where you can actually get free capital for your account just by registering. You can also then double your bonus when you trade just $1,000 on futures. You can also get an extra $30 bonus just for depositing $100, and these bonuses increase nicely as your deposit amounts increase all the way up to a $30,000 bonus. Of course, we need to do our due diligence here and zoom out to the monthly time frame to get some real perspective on the Bitcoin chart. We can see the doji candle that we were analyzing did, out of its indecision, cause a big dump, and we can see that the bottom of that doji candle wick was not only swept but actually broken by price, and we are currently sitting below that liquidity level. This is another sign that Bitcoin is right on the edge and that the bulls really do need to put in the work to come above this level if we're going to hold this range. When we see a big candle body like this with the small wicks, there is the risk and the fear that this could be one of 3 black crows. Most of you will know the 3 black crow candle pattern could look something like this, with roundabout equal candle bodies to the downside with 3 massive candles, and we can see this would take us roundabout all the way down to our 82,000 level. We still have 25 days left in this candle, so it's really anyone's guess how this candle is going to close. And remember, never trust a candle until it closes. If we're having wishful thinking here, we would look for a small green candle in the next monthly candle to give us a bullish Harami pattern here and a nice reversal back up to range highs. Something like we saw all the way back here, around about $26,000 for Bitcoin, where we saw a beautiful monthly Harami candle with a very nice reversal and continuation on the bullish trend. Having a look at our weekly channel, we can see that Bitcoin is just holding on at the lows of this massive channel. If you saw my last video, you will remember we were talking about losing the median line with a swift move down to the bottom of the channel, and this did occur. This is another case for the leveraged long traders entering positions now that we could see a move back up to that median line and possibly a break of that median line up to very nice bullish targets at the top of this weekly channel. This channel is also a very nice indicator of if we do lose this range, because we will need to see a strong break below and most likely a retest of the bottom of this channel, flipping it from support into resistance and then a big push down. If we have a quick look at the ETH against BTC chart, we can see a few very interesting things happening here. First of all, we can see price falling back into our massive downward sloping weekly channel. This could be very bearish for Ethereum if we do lose the top of this level, as we could see a move all the way down to the median line and then a move up, or possibly losing this level all the way down back to the lows of this channel, and even a fake out below this channel before a move up. This of course would mean much lower levels for Ethereum as well as altcoins. We can also see how accurate the fixed range volume profile is here, as ETH against BTC has directly come down to its point of control. This level is a great line in the sand to tell us that if we lose this POC, we could see a push all the way down to value area lows. If this POC holds us up, we could finally get the push that we need all the way up to the actual value area high zone of this ETH against BTC range. If we have a look at the weekly ETH chart, we can also see an extremely crucial level that we're currently sitting at. If you missed my last Ethereum video, let me quickly show you how I found this level and what it means. It is a very interesting level, as it is a Fibonacci golden pocket that was not respected and it was actually broken through. This is the Fibonacci retracement golden pocket of our previous completed range here on Ethereum. From when we were at this level of 4,100 all the way back in December 2024 to our lows here around about $1,580 for Ethereum in April. This is the space between the 0.78 and the 0.618, and this was an area we were actually looking at a reversal for Ethereum, but things were so bullish for Ethereum at that time that it pumped right through this level, retested the middle of that golden pocket as support, and moved all the way up to its larger 0.786 Fibonacci extension. Please watch my Ethereum video to understand these Fibonacci extension levels. Now we can see Ethereum playing out exactly to my bear thesis in that video, which is that we might get one more very nice chance to sweep up some Ethereum into our bags at this level of the support and resistance flip of our much larger symmetrical triangle, which is a scene of the crime, as we have not yet come to retest this level as support after breaking through its resistance. Apologies for this chart being a bit messy. I'm not going to go too deep into this now because I did go in depth into this in my previous Ethereum video, so please check it out if you missed it. This could be a very nice long level for Ethereum all the way back up to the $4,000 level, as we have seen very nice bullish momentum from this level previously. However, if we lose this level and retest this massive liquidity zone as resistance, we could see a very strong push to the downside, and there would be our retest of that support level around about $2,400. If you are overexposed to Ethereum, of course this is scary, but really this should get you excited, as you will be able to pick up Ethereum at lower levels for future higher prices. If we have a quick checkup on BTC dominance on the weekly time frame, we can see that price is moving from the bottom of our massive weekly channel slowly up to the median line once again that we did see a test of in this massive wick during Trump's big scare with the China tariffs. This might get even worse for the altcoins, as it does look like Bitcoin dominance is wanting to come up to test the top of that wick. We could see some relief for altcoins at this median level if it does give us a rejection on Bitcoin dominance. Actually, what I'm looking for here is a loss of this resistance level and a push all the way up to the top of this channel. This would mean a lot more blood on altcoins, but it would also then mean that we can get a stronger altcoin run all the way from the top of the channel to the bottom, as we saw here previously from about June to September. Having a quick look at XRP on the daily time frame, there's a few very interesting things to note here. First of all, we can see how important larger candle patterns are to understand this descending triangle played out very nicely, and actually gave us a beautiful conservative entry at the retest of the floor of this triangle with a very nice move to the downside on XRP. That was a 23.8% move to the downside. We can also see here that we are currently sitting in an order block zone for XRP, which could mean a very nice move up from here to possibly test the floor of that triangle once again. I would urge everyone to be very conservative here, as I have discussed on my Cardano analysis in the last video. When we see a massive wick to the downside like this, it very often is a sign that price can slowly come down to sweep this liquidity before coming back up. So keep in mind in your investments, in your dollar cost averaging, that the $1.2 level is looking like a very nice buy, and really dollar cost averaging all through this zone is one of the smarter ways to do this. It's also very interesting to see that a lot of analysts were calling this previous range a bull flag that went on to reach its target very nicely up at $3.5. And now it's interesting to note that price is actually trying to retest once again that broken bull flag resistance into support. If we lose this level, it could be a swift move back down in the same parallel channel range. Before we end off, just a little bit of fundamental news analysis here on Trump and his tweet last night about what's happening in the Supreme Court today. Trump has called this case life or death for the US. This is basically the case where the Supreme Court is trying to kill Trump's tariffs due to the havoc that they're causing in the markets. Trump says that with a victory, they have tremendous but fair financial and national security. Without it, we are virtually defenseless against other countries who have for years taken advantage. He then praises the stock market, saying that it has consistently hit record highs and the country has never been more respected than it is right now. He says a big part of the economic security is created by tariffs and the deals that they've negotiated because of them. This is very important, as obviously the confirmation that tariffs will continue could be very bearish and send Bitcoin down into the previous range, and a Supreme Court victory here could be very bullish for our high risk assets. Thank you for watching. I hope you've gained something from this analysis. Remember, these are just my own views and your views may be very different. This is what makes us stronger as a community, so please drop your insights into the comments. Remember to play from a position of power and strength, use your stop loss, and do not get wrecked.